Hey there, YouTube. This is a follow-up to a video I made prior regarding the ATR. So I believe I made that video using SPY, so I'll flip to SPY here, and just to recap, the purpose of the video was to give people some guidance on kind of just standard market measures, how to measure something like SPY if you're going to try to day trade or even swing trade. This really has applications regardless of time frame. And just to recap, the idea was to understand kind of where tops and bottoms might be within the course of a day, if you're a day trader, even a week or a month. And you use ATR to do that. At least that's one option. And you could use the RMA. I like to use SMA, and it just keeps it very simple. And the whole idea is that over time, stocks, ETFs, anything might move so many points on average within a day. And the whole idea is average true range is just the high to the low of a candle over time. And then you average that out. So, for example, on September 11th here, what a date to pick, we're looking at a little less than 5 points for that day from the high to the low, not the open and close. And the ATR you can see was at 542. So we moved a little less than the ATR. And then the next day, we're looking at a much smaller day at just half of the ATR. So this becomes a language that you can speak like with your trading friends or groups. And you can say, hey, SPY moved half an ATR or moved 1.5 times ATR, that kind of thing. So it's just a very useful framework. There's definitely some professionals out there that leverage this kind of mindset, measure, and language for an entire trade floor. So that's a recap, and we're going to get rid of ATR. So we're also going to hit the 5-minute time frame. And we're going to go ahead and turn on the indicator. So it's ATR anchored range %B. So it's already kind of hitting it. We got 50 likes on this, or boosts, I think TradingView calls them. And so the %B is kind of like an homage to Bollinger Band. So John Bollinger created Bollinger Bands, and when we look at the Bollinger Bands, there's also the %B, and it basically just shows you like where price is with respect to the bands, and the %B, I guess, is like % Bollinger Band. So in a way, it's a little odd, I suppose, that I call this %B because this is not a Bollinger Band, but it's fun and people understand. I think if they've used any of these indicators, they kind of understand what I'm talking about. So nobody's complained yet, and I don't think it really has any effect on the end result. So this line here represents price within the confines of the ATR. So you can go into settings, turn the chart overlay on, and you will be presented with a projected range. This starts right at the open, and it just crawls along with the price. I may make an update in the future where it actually gets you a little bit further out, but for now, this is what we got. And it's anchored to the open price. You can change this to prior close, but my preference is open. The default is open. And it's defaulted to 1 day time frame. So it's looking from the daily time frame, 20 bars. And the idea for 20 is that there are 20 trading days in a monthly candle. From this line here, which is your first level on the high side, past open, that would be just the regular ATR high. And below the middle line here, the open line, is your first low level. So that's the ATR low. So that means SPY is doing, if we measure this, SPY is doing an ATR of 6, almost 7 points. So if we take from the midline to the extension high, it's also the same amount of points, as well as from the open midline to the bottom. It's also nearly 7 points. The way that I like to use this tool is, again, another video I made, which is how important the open price is. And it makes for a very nice bull-bear bias. So if we're above, we're bullish. If we're below, we're bearish. And the idea for how I use this is the longer we're above open in the morning session here, the more I'm going to start considering SPY's heading here and here. Inversely, if we're underneath this, then here and here. So this study down here will align with where we happen to be within the ATR projection. So I call these a projection because it's taking data from a different time frame from historical, and it's plotting a range on current price. So looking at some prior days, so we had quite a large sell day here, which is going to invalidate a lot of market measures. It's going to be something that surprises a lot of the market. And I think it's a great call out that 20 days is not going to be as reactive to something like this. So when we have something like this, I'm more apt to actually take the default down to 5. And that's mainly just to have it bring this data into its measure much more rapidly than the 20. Because it would have to take 20 days, average them all together, and I kind of want to magnify this because temporarily the market is going to be, VIX is going to shoot up, the movement's going to be much wider potentially. And so I want to have the measure prepare for that. So, and what we can see is, so right after the big sell day here, we had a nice squeeze. So this tool can also show you kind of a squeeze day. So a squeeze day is going to be when we're within the open and we're testing it many times and we're rejecting the nearest extension, either high or low. Then more often than not, we're just going to channel inside of here. So if you're an SPX trader, you might look to do iron condors. There's all kinds of ways, you could create strategies. You could sell put credit spreads for this strike, call credit spreads for this strike. So then you have this day, October 14th, and we do break the low. We bounce off of this, or break the open and bounce off the low. Then we do a break and retest, which if you've watched any of my older content, I like to look at it as kind of like an in pattern here. And it's anytime we break a key level, retest it very cleanly, and then engulf and break beyond, which is exactly what we had. We had an engulf that broke over the open, and we retested very cleanly, and I think we closed right at open, and then engulfed that bar and took off. So when I see that, that's going to take me more towards here. Now, at this point, every time we make something like this, I start to ask myself, could this be the ATR low? And if that's the ATR low, then up here needs to be the ATR high. So that's, just kind of in summary, quickly how I'm constantly asking myself and structuring trades and how I use this range. So on this day, we actually did 1.5 ATRs. We did close within essentially 1 ATR, just slightly above. So very cool to see this stuff. We get near perfect rejections, near perfect bounces on a lot of these levels. So very effective. I'd love for you to try this. It's my gift to everyone that's a fan and been watching. I know I've received a decent amount of feedback from that ATR video specifically. So I hope this really just helps to complete or pair nicely with what I have already published earlier this year regarding the open price and the ATR. And the other nice thing too about this indicator is it gives you something to use when we're at all-time highs. So when we're in no man's land, we've got nothing to the left, and we want to be able to build trade plans intraday or even intra-week or intra-month. We could use this tool to have realistic targets that are based on actual data for this market. You can see how effective these are. I mean, they're just, it's a really great trading range. One last thing I'll cover in this video, I'm trying to keep it short, is golden pocket. So this is kind of another homage to the fib traders. So these aim to color the golden pocket when they're hit. It should color this %B line down here. And basically what it gets us is the 60, 61, and 65. I think I simplified those down a little bit for open to the extension high and open to the extension low. And then also another combination, I think, from here to here, both directions. So that's how you get these. And the idea for these is effectively like you kind of want to look for another break and retest. So once we break through one of these levels, I would be looking for this to be retraced and then enter for a continuation move. So the whole idea with that is we know stocks like to move in this kind of pattern. And so fib traders will want to take the high and the low pivots, and they want to get that golden pocket measurement. So a lot of times, like at the 50% retracement, will wick a little lower, and people end up getting stopped out and getting frustrated. And fib traders will swear by this, like that the 61 to 65 area, it's like a golden pocket, is the appropriate entry for continuation. And I can't deny, like, I've seen it quite a lot. I've also seen a lot of 50% tests that continue. So just kind of depends on your trading style and what all you're looking for. So that's an option that's there. You can modify it. You can adjust all the colors. If you've used any of my other stuff, you know that I like to provide a lot of options. So it's open source. Feel free to dig into the code and let me know what you think. So I hope you enjoy this. And I didn't even get to cover things like weekly time frame and monthly. I go into some of that I'll maybe go into some of that in future videos. So thanks for watching. Happy trading.